Hello, this is my final exam video presentation for my FIN323 course. In this presentation, I give a small description about all of the essays that I have written for this exam. Question 1. Write a reflective essay on your over-the-counter trading simulation experience. This essay is based off of our trading simulation activity that our professor had conducted in our FIN323 course. This essay talks about the different trading strategies that is usually employed when doing forex trading. I have started off this essay talking about some general theory about the forex market and some concepts that are usually used in the forex market. Currency pairs is one such concept that is importantly used in a forex market. A currency pair is a set of the different currencies that an investor wishes to deal in. I have also given details about my group and the objectives of my group and how we were able to efficiently and effectively fulfill our objectives by the end of the 3.5 hour dealing session. Furthermore, I have also talked about the different strategies that professional traders use in their day to day dealing. I have given more importance to talking about the day trading strategy because it is the most commonly used among beginners. Through this activity and the research that I have conducted to write this essay, I have learned a lot about forex trading for beginners. In a gist, I have understood that as a beginner, it's important to be up to date with the news because the different events that take place in a current country has an effect on its currency. For example, the US elections caused great fluctuations in the USD. Furthermore, it's also important to learn the technical analysis and learn about moving averages and how to analyze the historical trends of a currency. This will help us to be able to predict how the currency would move in the future. Finally, it's important not to have overconfidence bias in our ability to trade in the forex market. Overconfidence bias is one of the bias in behavioral finance and is best avoided as a beginner. Question 2. Describe the lessons learned from COVID-19 for portfolio analysis. This essay is based off of our COVID-19 pandemic that began in January 2020. On March 11th, the World Health Organization branded the COVID-19 virus as a global pandemic. The stock market was deeply affected by this virus. In this essay, I've talked about how it affected the different industries and the different sectors. The medical sector and the technology sector saw a rise in the stocks as the people began moving on to a more online way of life. But other sectors such as the airline sector, the petroleum industry, they all saw and started yielding negative stock yields because people stopped traveling and many countries issued a lockdown. In this essay, I've also talked about some literature written by a professor, Dr. Vikash. Uh, he has written many papers about how the Chinese stock markets have responded to the virus and how the major lack of trade between countries has affected uh, the stock markets. Furthermore, the literature also talks about behavioral finance and its role in how the stock market reacted to the pandemic. When hearing good news, the stock market responds in a positive way, but when hearing negative news, the stock market performs poorly. Furthermore, there are also other concepts such as the employment of safe haven assets by financial analysts and professional portfolio managers. To make a profitable portfolio, it's important to include all safe haven assets so as to reduce the risks. Question 3. Discuss how psychology of the market can be used in portfolio construction and provide practical examples. So, in this essay, I have talked about the psychology. I've given some general introduction about what is psychology and a different branch of psychology, which is behavioral finance. Behavioral finance deals with the mindset of investors and their thought processes that they go through in the course of their dealing in financial markets. There, under behavioral finance, there are different biases that are studied by professionals. For example, the overconfidence bias is one of them. Overconfidence bias is one in which the investor is overconfident in their own ability to trade well in the financial market. This overconfidence is often what leads these beginner investors to loss, because no investor can make only profit. The stock market or the entire financial market is an uncertain place where everyone is bound to make loss at some point or the other. Similarly, there is the hindsight bias and many other biases. I have given the example of our trading simulation activity that we have done in our FIN323 course, and I have explained behavioral finance in relation to our activity. The two main emotional factors that are involved in the dealing session was fear and greed. Because of fear, investors often make impulsive decisions, and the same goes for greed. Because they want to make more money, they often make impulsive decisions that lead them to losses. Furthermore, I've also given some explanations on how to avoid these biases and be aware of the risks and how to minimize them as much as possible. Question 4. Explain the importance of business ethics and governance mechanisms when managing a portfolio. Illustrate your answer with practical examples. In this essay, I've talked about the importance of corporate governance and business ethics. Business ethics basically talks about the different moral aspects of business that employees and all people in the business have to abide by to ensure that everything is running in an ethical manner. Corporate governance is the system of rules and laws that are laid down by professional bodies to ensure that there is no illegal practices that goes on in the company. Abiding by corporate governance also ensures that we can avoid any scandals in the future. There were many scandals that took place in the past with many big companies. For the purpose of this essay, I have chosen the Lehman Brothers. The Lehman Brothers was one of the largest United States based financial institutions, and it came to a close in 2008 when they filed for bankruptcy. There were a lot of inner debts that the company had faced, and during the subprime mortgage crisis, they couldn't handle the debts and they filed for bankruptcy with no other option before them. We analyzed the case study and understand the reasons why the company had to shut down and how they could have had a different fate if they had been more considerate to the corporate governance practices and been more ethical about their business dealing operations. Thank you for watching my video presentation.